Owner who's worried about what would happen if their bank were to collapse, then this video is for you. I'm going to talk about the Silicon Valley bank collapse and what it means for you as a small business owner and what you need to know about banking for your small business. Hi, my name is Megan and I'm a CPA and small business owner just like you. I take aspiring and newbie entrepreneurs from overwhelmed to empowered. Recently, there was a big failure in Silicon Valley, and a lot of people are wondering what that means for them. In this video, I'm going to break down exactly what happened and how it affects your business. So sit back, relax, and let me teach you what you need to know about bank failures in your small business. The Silicon Valley bank collapsed this week, and it's the first bank collapse since the 2008 Lehman Brothers debacle. Many small business owners are left shaking, wondering what they need to do to protect themselves and their businesses. Many individuals and small businesses are wondering if their bank were to collapse, what should they do? Here at Small Biz University, we know that knowledge is power. Hearing about bank failures can be a scary time for a small business owner and individuals alike. It's even scarier when you feel like you don't know what's going on. So, true to our knowledge is empowerment motto, we are going to discuss the Silicon Valley bank collapse, what caused it, and what small business owners should know and understand about banking. So Silicon Valley Bank is, of course, a bank out of Silicon Valley and was the 16th largest bank in the U.S. up until its collapse. The banking clientele of that bank is reported to be primarily wealthy individuals, tech startups, and venture capitalists. But I've seen many social media reports on Twitter and TikTok that are discussing how average people, even so far as the Midwest, are being impacted. In some cases, some companies had payroll running through the bank, and the payroll deposits were caught up in this collapse. Some other small businesses use Silicon Valley Bank for their bank because they were told that it was, a good bank to use. So it's not just tech firms and wealthy individuals who have been impacted. It's people just like me and you. Here at Small Biz University, we try to break down things into terms that are easy for newbie and aspiring entrepreneurs to understand. So I'm going to try to explain to you in terms that are pretty simple to understand what happened to cause the collapse of Silicon Valley Bank, and keep in mind that this is a simplification and there could be a lot more nuances that come out in the future. So there were really two driving factors behind this collapse: a run on the bank and a bungled communication between the bank and its customers. And of course, the customers included many small business owners. According to the New York Times, the bank had purchased a large amount of U.S. Treasuries back when interest rates were about 1.79%. When you have a bond and you purchase it, the face value of your bond is, say, $100. You're going to, if you go to sell that bond before its maturity, if the interest rate were 0.5%, somebody would be willing to pay more than $100 for that bond because the coupon rate is 1.79, which is greater than 0.5%. But now that interest rates are over 3%, those bonds were worth less than their face value. So to sell those bonds, you would have to sell it for less than that $100. So that being said, the bank sold these bonds. I think there was 21 billion worth, and they wrote off a $1.8 billion loss, which is huge. So when a bank has something like a treasury bond, they put that in what they call hold to maturity deposits or investments. And when something is held to maturity, they don't have to, they meaning the company, doesn't have to account for or disclose fluctuations in market value because there's really no true loss incurred if they hold it to maturity. So if you were to read the financial statements as a user of the financials, you couldn't see this looming loss. And simultaneously to the bond sale, The bank was working on new fundraising efforts, which included a private equity investment and the sale of a bond to the public, their own bond. And due to the timing of how all of this happened, it took the market by surprise, and analysts and advisors to Silicon Valley Bank's many customers, which in this case would be mainly your very wealthy, your ultra wealthy people and your venture capitalist. They didn't understand what was happening because there wasn't a lot of forewarning, and so they advised their clientele to pull their funds from the institution. This is what's called a run on the bank. So a run on the bank is the driving force of any bank failure, because a bank doesn't have 100% of its deposits in cash at any given time. And so if enough people or depositors panic and go into the bank and withdraw their funds out of there, it could be quite catastrophic. So this was just what I would call a comedy of errors, or just a fluke set of circumstances that led to this catastrophic failure. But that being said, it's expected that analysts are going to be putting more effort into looking at financial institutions to see what's going to happen in the coming months. It's possible that had the bank communicated with investors and the markets a different way, or timed the sale of the bonds differently, the crisis could have been averted. I'm sure more will come out as the bank collapse of Silicon Valley Bank is investigated further. But, all that being said, how will the collapse of Silicon Valley Bank and the overall impact to the economy affect small businesses? And I would caution the general public from making too many generalizations in the coming months regarding the clientele of Silicon Valley Bank. There's already a large social media presence saying that the government and another big business shouldn't bail out Silicon Valley Bank because that would be bailing out the elite. But there are stories of people who are just like me and you, who have had their life savings impacted by this bank failure. So we should be cognizant of those people before making too many generalizations and saying that the bank should not be bailed out. And also, there are many people whose payroll was delayed because the payroll deposit that was made by the company that was paying them was held in Silicon Valley Bank as a conduit before it was divvied out to everybody. So, what does this all mean for you? Well, first off, if you're a small business owner who has less than $250,000 in cash, you do not need to worry. The FDIC insures each depositor up to $250,000. And this is per bank customer. And so if you are a single member LLC and also have a personal account, then you are insured at a bank for both of those as separate depositors. So you would be insured for your $250,000 business deposit and your $250,000 personal deposit. And then if you have a spouse and have a joint account, conceptually you would be covered up to $500,000. So if you have more than $250,000 cash and you're worried about bank failures, you can bank at multiple institutions. You can divvy up your funds across several institutions, and in the unlikely event that more than one of those institutions were to collapse, you would have that $250,000 of coverage at each one. So there is ways for you to spread out risk, and you should discuss that with your financial advisors to see what they recommend in your particular circumstance. So you might be wondering what other banking facts are good to know for small business owners. One thing that small business owners should be aware of is that they can also bank at a credit union. Deposits in a credit union are not FDIC insured, but they are insured by another governmental entity called the NCUA. Deposits are also insured up to $250,000 as well, even though it's insured by a separate insurer. Credit unions are typically more local institutions, and they are generally not for profit and share their profits with their depositors. The downside of credit unions include smaller geographic footprints. Sometimes, in my experience, you can build better relationships with a credit union than you can a large retail bank, just due to the number of clients served and the small town feel that many credit unions have. Sorry, my girls are having a fight in the background. Another small business bank tip is regarding offsets. So if you have debt with a bank and also have a deposit account there, in many cases the bank has the right to offset funds deposited against your debts in the event that you default and are not current with your payments. In general, this won't happen unless you're delinquent. Federally chartered banks, so think Chase, Bank of America, Wells Fargo, etc., are not allowed to offset your deposit account for consumer credit cards. However, those same regulations do not exist for many credit unions and state chartered banks. So credit unions and banks under a state charter can sometimes also offset consumer credit cards as well. The best thing to do in this case is to get clarity from your banking institution on what rights of offset exist for your family of accounts, to make sure that if you're in a situation where you can't pay a debt, that your cash isn't withheld from you. And this is a true story. My dad passed away in 2015 and had an account at a credit union affiliated with his former employer. He had a joint account there with my mother and a credit card account in his name only. When he passed away and my mother took the paperwork to the bank, they took the amount that was owed on the credit card out of that joint checking account, even though she wasn't on that credit card. This was troublesome for her. It wasn't the best timing. So the takeaway here is to try to have your deposit accounts at a place that is separate from your loan accounts so that you can manage your cash in the event you have a situation where you don't have the money to pay your bills. And that'll give you time to refinance, sell an asset, do what you need to do to satisfy your obligations. So now your last question is probably, well, what if the bank fails? Like, how will I get my money? If your bank is to fail, first the government will try to secure a buyer for the institution. In some cases, even amounts over the insured amount will go to the new bank with no issue. They'll just buy the bank up, and you won't lose anything above the $250,000. If no buyer can be found, then the FDIC will write checks to each depositor for the amount in their account up to the insured amount. So the takeaway is that while the Silicon Valley Bank is alarming, it's not a reason to panic. As a small business owner, having a basic understanding of how banking works and what causes the bank to collapse can ease a lot of your stress. As always, as a general disclaimer, all of this information has been for educational purposes only. If you have a particular situation, I would advise you to talk to your financial advisor or an attorney in your area. My name is Megan. I'm a CPA with Small Biz University, and I look forward to discussing more business topics with you in the future.